Welcome everyone to today's December daily Q&A session. I'm Rachel Neighbors. You're here with Neighbors Group and Solo401k.com. The end of the year can be a flurry of activity, especially at Solo401k.com. We have a flood of new clients and account holders wanting to get your plans established by the December 31st deadline. In order for us to help provide better support and make sure that you really have a team that's here for you, we host these December daily Q&A sessions so that you have a place to come to ask your questions and get those questions answered. I want to share another resource with you I think is really helpful, which is our Solo 401k network. That's at solo401k.net. That's a free network anyone can join. It's a great place for you to post questions about your Solo 401k plan or your checkbook IRA LLC plan. Our experts are in the network every day answering questions and making sure that you're connected with the right resources. So if you have questions about setting up and using your plan, make sure you post those questions to the network at solo401k.net. And alternatively, we host these daily Q&A sessions in December so that you can have the support you need as you're getting your account set up. We do have several pre-submitted questions, so I'm going to jump right into those. Our first pre-submitted question comes from Kyati. Kyati says, the Solera bank account and Fidelity brokerage account are for my account or for the trust account? Kati, when you're opening bank accounts and brokerage accounts for the Solo 401k, those need to be titled in the name of your 401k plan or trust and use the 401k trust tax ID number that we obtained for you. If you're brand new to us and you've just opened a plan in the last couple of days, you have a placeholder or temporary tax ID number for your 401k plan. The IRS closes every year the last week of the year. During that time, they do not issue any other tax ID numbers. So what we do is we input a placeholder temporary tax ID number to your 401k documents so that we can draw your documents and get them qualified for 2020. When the IRS reopens next week, we will get your tax ID number for your 401k, and you can then proceed to open bank and brokerage accounts for the 401k plan. But Kyati, I think for you, we have already prepared your documents. So when you're opening a Solera account and a Fidelity brokerage account, those are going to be for your 401k trust. Use your 401k trust tax ID number. And Kyati says, the reason, should I continue to receive my 1099 miscellaneous payments in my personal or separate bank account or put those in the Solera bank account? Great question. Payments that come to you via 1099 miscellaneous income need to go to your personal or business bank account. Those do not go right into your 401k. Your 401k cannot receive business payments. So think about it this way, Kyati. Your Solo 401k is your company retirement plan, but your company needs to make money before you can put some of that money into your company retirement plan. So you probably have a bank account or a brokerage account in your personal name, or maybe a single member LLC if that's what you use for your business. That's going to receive your 1099 payments. That's your business making money. Then when your business makes that money, you can decide to contribute some of it into a 401k. That 401k has a separate bank or brokerage account or both. So you receive your business income, and then some of that income is contributed into your 401k bank or brokerage account. The business income you receive goes into your personal or business bank account, and then you contribute those funds into your 401k trust, bank, and brokerage account. Great question. I think you've got some more questions here, Kathy. So you said, as you may remember, I have a W-2 job. And for 2020, we've made the below contributions. We maxed out the employee pre-tax, $19,500. There was an employer matching contribution. Okay, here we go. There was pre-tax employee of 19,500, after-tax employee of 10,000, and employer matching of about 1,300. So you've maxed out your contributions as an employee for salary deferrals with your current job. Then you go on to say, I'll be making $25,000 via my 1099 miscellaneous self-employed income. As you know, I have 3 accounts in Solera and Fidelity, pre-tax, Roth, and after-tax. Can you please guide how much I can invest in the below buckets and which account? Really good question, Kyati. I can't guide you as to what you need to contribute. That's going to be a question for you to work with your accountant or your CPA on. What I can do is share some general best practices with you. You've already maxed out your pre-tax contribution as an employee. That's your salary deferral at work. So what you have left over in the solo 401k is either your voluntary after-tax contributions, which you can convert to Roth 401k, and or you can do pre-tax contributions for the employer profit sharing. You need to make the determination, Kyati, which bucket you want to put your funds in. And it might be both, but you need to make that determination with your accountant. If your goal is to get as much of a tax deduction as possible, then you might want to maximize your employer profit sharing contribution. That would be 20% of the $25,000. So that could be $5,000 that can be a profit sharing contribution. Then on top of that, you might decide you want to put as much as possible into your after-tax contribution, and you could put the remaining $20,000 in. So let's back up there. You've already maxed out your employee salary deferral contributions at work. So what you have left over in the solo 401k is voluntary after-tax contributions and employer profit sharing contributions. Employer profit sharing contributions can be 20% of your earned income, and that's pre-tax only, not Roth. So potentially what you might do is take $5,000 of your $25,000 and put that into the pre-tax bucket as a profit sharing employer contribution. The remaining $20,000, perhaps you put into your after-tax bucket as an after-tax contribution, which you can then convert to Roth. Contributions are highly personal. They're highly unique. So we can't tell you what to do. We're not your compliance officer. Our job is to provide options for you so you can make the decision that best suits your needs. That said, Kathy, I think it's important. Your next step is to work with your accountant or your tax advisor to determine what your goals are. Is your goal to make as big a tax deduction as possible? In which case you probably want to max out your profit sharing contributions. Put that full $5,000 into the solo 401k. Alternatively, if your goal is to put as much into the Roth 401k as possible, you can put either the full $25,000 or maybe just $20,000 into the after-tax portion of the 401k and convert that to Roth. But again, make sure you're working with your accountant or your CPA so they can guide you. Great questions, Kathy. Thank you. Our next question comes from Kelly. Kelly says, I have an account set up with Titan Bank. My CPA says I should do the employee contribution before the end of the year. Do I just make a deposit into this account for my employee contribution? Yes, that's what you'll do. Kelly goes on to say, I plan to put some of my contributions into crypto. I've used Kraken before and prefer to use it for this as well. Looks like I just create a new Kraken account using my solo 401k LLC and then wire from Titan to the new Kraken account. Is that correct? Yes, you're correct. Everything that you're explaining right now, Kelly, is exactly right. And what I'm going to do is share my screen with you. I want to walk you through a helpful guide that I think will make a lot of sense for you, Kelly. So here you're on a solo 401k dashboard. If I click on support, that's going to open our knowledge base at support.solo401k.com. And if I just type in Kraken to the search bar, you'll see that we actually have a training that walks you through a video tutorial exactly how to open your Kraken exchange account for your solo 401k or your 401k LLC. Follow the video guide to open the Kraken exchange account. And then what you'll probably do, Kelly, is you'll make your contribution from your bank account into your Titan 401k trust bank account. Open the Kraken account for the 401k LLC. And then you just send a wire from Titan to Kraken, and then your 401k is able to buy and hold crypto. Great question, Kelly. Okay. I think we've got one more question here from Kelly. Kelly says, I only see one account with Titan Bank. How do I differentiate between Roth and non-Roth funds? Kelly, we would recommend that you contact Titan and open a second bank account. Having two bank accounts for your 401k makes things a lot easier when it comes to keeping track of pre-tax versus Roth funds in your account. You don't want to try to have to keep track of that, mentally. So having two bank accounts, one for pre-tax money, one for Roth funds, will make things much, much easier. If you only have one bank account right now with Titan, then we'd recommend you contact them, open a second bank account specifically for your Roth funds. Great questions, Kelly. Thank you. Our next question comes from Glenn. Glenn says, I'm moving money from a Roth 401k to a Roth IRA. Does the money have to sit in the Roth 401k for 5 years in order for it to transfer tax-free? No, it does not. You can move money from a Roth 401k to a Roth IRA anytime. Glenn says, so anything that goes in this year would have to sit there until 2025? No, you can transfer funds from the Roth 401k to the Roth IRA at any time. Glenn then continues, when the transfer occurs, if it's in a stock account, does the stock have to be sold to make the transfer? Not usually. It depends on the brokerage firm that you're working with. Let's say you have a Schwab account, for example, and you want to move the assets in kind from your pre-tax bucket to your Roth bucket. We would recommend you open a second Schwab account, this one for your Roth funds, and then you can just move the assets from one account to another. Alternatively, if you're doing a complete conversion, then what you might want to do is just convert all of the assets in the Schwab brokerage account in this example. You need to work closely with your accountant because there are taxes that are due when you're going from pre-tax to Roth. But actually now, and I want to change my answer here a little bit, Glenn, for a stock account, does the stock have to be sold? Not necessarily, but again, it is going to depend on the brokerage account. If your Schwab account has your Roth 401k, so you've got a company retirement account with them, and then Schwab also has a Roth IRA, you'll want to contact them and see if they will allow you to move the funds in kind from one retirement account to another. It should be okay, but you'll need to contact whoever is holding your brokerage account to find out if that's something that they will allow. I was thinking of going from pre-tax 401k money to Roth 401k money, in which case you're the boss, so you get to just move the assets around. But with a Roth IRA, there's a custodian involved. If this is holding stocks, it's probably going to be a brokerage firm. So in this case, Glenn, moving money from Roth 401k to Roth IRA, you can do that at any time. It should be possible to move those Roth 401k stocks into a Roth IRA, but you'll need to contact your brokerage firm, who's the custodian, and find out what guidance they have for you. Okay, next question comes from Glenn. Is there any place on your site that mentions how to calculate required minimum distributions? I don't know if we have our required minimum distribution calculator in the knowledge base. I'll have to check on that. What I'm going to do is go to our website. This is our website at solo401k.com. This little magnifying glass here is going to let you do a search on the site. So I'm going to type in required minimum distributions. I know we have several articles explaining required minimum distributions. Here we go. These RMDs is going to help you there. Also, if you go to our knowledge base and we type in required minimum distributions, we have articles here as well on the required minimum distributions. So I would recommend, Glenn, if you have questions on RMDs, that you check this out. We do have several resources that are available, including links to IRS calculators for your RMDs. So yes, we do have that information, and you can find it in the knowledge base at support.solo401k.com. Great questions, Glenn. Okay, now we have a handful of questions here from Tri. Tri's first question is, I want to know who's supposed to sign on the line that says secretary, and why does it say secretary on these documents? Tri, I think you're referring to your solo 401k plan signature pages. You are the secretary. This is usually what's listed whenever there's a corporation that is sponsoring the solo 401k plan, and you can sign as secretary since you are going to keep the paperwork for your 401k plan and for your business. So you can sign as the secretary, and we list secretary because that's the title for corporations on who is usually keeping the minutes for the resolution of board members. Question number 2. Do I just sign my name as I always do on the employer portion and president the same way, but title it as president or trustee respectively? Yes, you can just sign your name like normal everywhere that requires your signature in the 401k plan signature pages. And I'll just share my screen here so we can take a look at these solo 401k plan signature pages together. If we go back to our 401k dashboard, we have our sample dashboard here. You've got your 401k plan signature pages. You can click on this link to view, and this will open the PDF document for you. Excuse me. Keep in mind that these signature pages are not your entire 401k. Your entire 401k can be found on your dashboard where it says 401k plan and trust. This is a zip file of all of the forms, amendments, plan document, trust agreement, adoption agreement. This is an entire file folder of your 401k plan. So that you don't have to try to dig around and find all the pages that require your signature, we created the signature pages packet for you. So you are doing just the right thing. Open your signature pages and you'll scroll through and you'll sign wherever is appropriate. Now, you are playing multiple roles in your 401k. You are the employer. You are the secretary. You are the trustee. You are the plan administrator. You are the plan participant. You wear many hats in your 401k plan because you fulfill all of these roles in your business and your 401k. So everywhere that requires your signature, all you need to do is just sign and date. Every page requiring signature, just sign and date. Now you are the member, you're the employer, you're the trustee, you are all of these roles. So you can go ahead and sign everywhere as you. Your next question is it my personal information, or whose information am I supposed to use for the beneficiary designation form under employee? And what account or plan number do I use? Great question. Let's go back to these signature pages here and we'll open up the beneficiary designation form. So under the beneficiary designation form, you are the employee. You're the employee of your own business. Remember, 401ks are employee benefit plans. So this plan is benefiting you as an employee of your own business. So you would input your information here as the employee. So this is where your information is going to go. It's your personal information right here in this section for employee. Account or plan number, you can type in 001 because you have the first and only plan for your business. And you also can find this information in your solo 401k trust. Hold on, let me log back in here. When you download this zip file, in your adoption agreement on page 3, we list your plan number, and that's 001. So you can put that right here, account or plan number 001, right under your information as employee. Your next question, continuing on. Do I choose anyone I want for primary beneficiary? Yes, you can choose anyone you want. If you are married, then you might consider listing your spouse as the primary beneficiary, but that's not required. You can list anyone that you want. This is the person who will receive your assets in the case of your passing. So we do recommend that you complete the primary beneficiary and beneficiary designation form under the guidance of your estate planner. Continuing on with your questions, you said, am I also the participant and sign as the participant? Yes, you are exactly correct. So you would sign here as the participant. That's you. You are the plan participant. And then you're also the plan administrator. So I know, your next question was, who's supposed to sign under plan administrator? That's you. Now, I want to bring your attention to an article in our knowledge base that I think is really helpful. So if I do a search for participant, I think so this is a really good one. What's the difference between a participant and a trustee in the solo 401k? But the one I'm looking for is called, who are you in your solo 401k? Let me see. Who you are in your solo 401k. I'm going to go ahead and put a link to this here in the chat. This is a really helpful article from our knowledge base because it goes over all of the roles that you play and the purpose of each role in the solo 401k plan. So you are the plan administrator. You're an employee participating in the plan. That means you're a participant. You're the business owner sponsoring the plan, and you're also the plan trustee deciding where to invest plan assets. So if we go back just here to the beneficiary form, then you would fill out your information in the top part as the employee. In the middle section here, you'll designate your beneficiary. You can have as many as you want, primary, contingent, etc. You sign as the plan participant because it's your plan. You're participating in the company retirement plan. And then you sign as the plan administrator because you're also in charge of running the plan. So you'll sign in all of those places, Now, I also want to bring your attention to this spousal consent form. So this goes back to your question, can I list anyone I want as a primary beneficiary? Yes, you can. Anyone can be your primary beneficiary. This section only requires notarization if you're married and if you select someone other than your spouse as the primary beneficiary. If you are married and if your spouse is your primary, nothing needs to be notarized. This form only requires notarization if your spouse is waiving his first dibs rights on your assets. So if you're married and if your spouse is your primary beneficiary, that form does not need to be notarized. But you will sign in all the places, because you are the plan administrator, you are the employee, you're the participant, you're the employer and business owner, and you're the trustee. So you're going to sign in all of the places. Okay. Next questions from Who is the contingent successor trustee? Is this also me, or who should I use? Am I required to have a contingent successor trustee? Good question. Let's go back to the signature pages here, Right after the beneficiary designation form, we should come to the appointment of contingent successor trustee. So a contingent successor trustee is someone that will take over for you as trustee should you become incapacitated or you're unable to continue as the trustee for the 401k plan. In that instance, you want to name a contingent successor trustee. A contingent successor trustee is different than a beneficiary. The beneficiary is who receives your assets in the case of your passing. The contingent successor trustee is who runs the plan should you no longer be able to continue. Generally, a contingent successor trustee is going to distribute the assets to another retirement plan or wind down the plan entirely. So back to your questions, Tri. The contingent successor trustee is not you. This is who takes over if you can no longer continue as trustee of the plan. This is generally a spouse or a trusted contact, but you'll want to choose who is the right person for you. You are not required to have a contingent successor trustee, but it certainly makes things easier. Knock on wood, if something should happen to you, you need to make sure there's a plan, a succession plan in place of someone that can take over your duties as trustee. That's the job of a contingent successor trustee. So it's not required, but we do recommend that you fill that in and give a copy to your estate planner or your legal counsel or your accountant so that if something happens to you, somebody else can step in and take over as trustee. Great question. Your next question, Tri. In my plan, it says I have 3 accounts, pre-tax, after-tax, and Roth available. If I were to get married and want to open accounts for the spouse, would there be an extra charge for amending my plan at a later date? No extra charge. We can add your spouse at any time, and that is complimentary. Great questions. Okay, I think we have a couple more here for Tri. Where do I see the area where the Special Purpose LLC is set up? How do I go about setting up additional LLCs for each asset for extra protection in my solo 401k? For example, having an LLC per rental real estate. So if something were to happen with one property, it would isolate the claim to just that one property. So Tri, I think we just got your application in today or yesterday. The IRS is closed for the year. So what that means is we still prepare your documents. You are qualified for 2020, but we have to wait until the IRS reopens next week to get your tax ID number for your 401k. Similarly, because the IRS is closed, we have to wait until next week to form your Special Purpose LLC. So if you elected to have us form a Special Purpose LLC for you, then we'll be able to take care of that next week after the IRS reopens. And then we will put your Special Purpose LLC documents on your 401k dashboard, Tri. So we'll upload your articles of organization, tax ID number, EIN letter for the 401k, your LLC minutes, your LLC operating agreement, your registered agent information. We put all of that on your 401k dashboard, so it's one place for you. But we have to wait until the IRS reopens. First, to get your tax ID number for your 401k plan. And second, to get the tax ID number for your Special Purpose LLC. Now, to the next question, how do I go about setting up additional LLCs for each asset for extra protection in the solo 401k? You can just reach out to our team, send us an email, and we can form additional Special Purpose LLCs for you. Your solo 401k can have unlimited Special Purpose LLCs connected to it to hold different assets. Great question. Okay, next question from Tri. How do I go about converting pre-tax employer contributions into a solo 401k account if and when I want to? I'm going to share my screen for this, Tri. I think that this will be really helpful for you. A couple of resources I want to bring to your attention. So first, let's go back to your 401k dashboard here. And if you select calculators, then you'll see there's a Roth Conversion calculator. This is a great tool to get started with Tri so you can see what your potential tax liability will be. Remember that converting pre-tax funds to Roth is a taxable event. You can do that at any time, in any amount, with unlimited conversions allowed in our solo 401k plan. So work closely with your accountant and your tax advisor, since this is a taxable event when you move from pre-tax to Roth 401k funds. That's going to cost you taxes. So work with your CPA, your accountant, to determine the frequency and the amount of your conversion. That's a conversation for you to have with your CPA. But if you want to play with some numbers, then you can access the Roth Conversion calculator right on your 401k dashboard under Calculators. Additionally, what I want to bring up is in your knowledge base. So remember, from the 401k dashboard, you just click on Support, and this will open the knowledge base for you. And let's type in conversion. So you'll see here, Tri, that we have step-by-step instructions on how to do an in-plan Roth conversion. We walk you through exactly what you need to do so that you have those step-by-step instructions. Now, again, doing an in-plan Roth conversion, it's pretty straightforward, but it's something that you want to make sure that your engaged tax professional is helping you with. So use the tools that we have available, those Roth conversion calculators, the in-plan Roth conversion forms that we provide for you. That's in your 401k zip file. But you want to have your accountant or your CPA looking over your shoulder, making sure that you are properly calculating any tax liability and that you are properly completing any companion forms. All of the forms that you'll need are in your 401k dashboard or your 401k zip file. And then work with your CPA to make sure that any taxes due on the conversion are properly calculated. Good question there, Tri. All right. I think we've got one more question here from Tri. So Tri says, how do I do a conversion from a Roth solo 401k into a Roth IRA to avoid an RMD in the future? I think this is a mega Roth conversion. How do I do it with real estate and other tangible assets? Is it different from liquid assets such as cash? Great question, Tri. So again, this is going to be an instance where you will work closely with your accountant or your tax advisor so that you can move the funds from your Roth 401k to your Roth IRA. It's very important that you have an accountant or a CPA familiar with the solo 401k plan so that you are well supported. And I want to share my screen here, Tri, to show you in our knowledge base, we always maintain, I'm just typing in CPA, we always maintain a list of CPAs that are familiar with the solo 401k plan. So you can download this PDF list and contact any of these CPAs, accountants. They are all familiar with the solo 401k plan. They will all be able to assist you in moving the funds from the Roth 401k to a Roth IRA. They'll also be able to assist you with any in-plan conversions. It is possible to convert or retitle tangible assets such as real estate. That's absolutely possible with the help of your accountant, of course. And in this particular instance, I think contacting Nate Bush right here, Bush Tax Company. Nate has a lot of doors. He is a real estate guy, and he's very familiar with the solo 401k and how it works specifically with real estate. So if you have questions on real estate related matters with your solo 401k, I think Nate in particular is a very excellent resource when it comes to doing these conversions. So to just recap there for you, Tri, you will want to work closely with your accountant or tax advisor to do the conversion from the Roth 401k to the Roth IRA. In short, all you're doing is moving money or moving assets, retitling assets from one account to another, and completing a short form on your 401k dashboard. So it's quite straightforward, but we do strongly recommend that you have your accountant or your tax advisor guiding you through that process. Great questions, Tri. We're so happy to be working with you. I'm glad you're really digging in. And yeah, thanks so much for your questions. Okay, next question comes from Lipsy. Lipsy says, how do I know what other documents my accounts needs? Lipsy, can you clarify for me here? Are you asking what documents your accountant needs, or let me know which accounts you're asking about specifically that you have questions on? All of your documents that you need should be in your 401k dashboard. Again, if I'll share my screen here. If we are looking at your 401k dashboard, Lipsy, then what you'll see here is there is going to be your plan signature pages, your 401k plan and trust, and your EIN letter. Lipsy, I think we prepared your plan last week, so I think you have a tax ID number from the IRS. Whereas Tri, for example, I think we just prepared your plan yesterday, so you probably don't have this link yet because the IRS closed on December 22nd for the remainder of the year. So everybody that doesn't have the tax ID number yet, you'll get this when the IRS reopens. We'll get your tax ID number, and then you'll have this as well. But Lipsy, for your question, there are several forms and files in this link right here for your plan and trust. Of course, this is a demo page, but Lipsy, yours will look, be named appropriately for your own 401k. You want to download this plan and trust file. It's a zip file, and you'll unzip it, and it's a folder. And there's probably 20 to 30 documents in that file. That should include everything that you need for your accountant and to open any accounts such as bank or brokerage accounts for the solo 401k trust. If there's anything that you have questions about, make sure you let us know here on these December daily Q&As so we can help you go through those documents. But all of your documents that your accountant needs and that you need to open accounts should be right there in that zip file for you. Okay, great question. Thank you, Lipsy. All right. Another question here for Lipsy. My LLC will pay a salary of $150,000 via a 1099 to my husband and I. So how much can the employer contribute to the solo 401k? What about self-employment taxes? Great question, Lipsy. Contributions to a 401k plan are net of self-employment taxes. So you make your money, you pay your self-employment taxes, and then you can calculate your contributions. So you'll need to work with your accountant or your CPA, Lipsy, to determine how much you'll owe in self-employment taxes. Usually self-employment taxes are about 15%. That's about $22,000 on the $150,000 earnings. 50% of that is tax deductible. It's not just a black and white contribution calculation here. That's why we strongly recommend that you work with your accountant. But one thing I do want to bring to your attention, Lipsy. So sometimes splitting up your payroll between both spouses can actually increase your contributions. So let me share my screen here, Lipsy, and I want to show you what I mean. So what I want to do first is get to our contribution calculator. I'm here on the 401k dashboard. If I click on this drop down for calculators, now I'm going to click contribution calculator. So Lipsy, if you guys have an LLC and you're paying 1099s, then you're an unincorporated sole proprietorship. So what that would mean here is, let's say you're going to do 150,000. And I'm not sure of your age, Lipsy, so I'm going to assume you're under age 50. If you're paying yourself, let's say you're paying all the money to you. You're paying all the money to you, 150,000. You can contribute $47,390. But now let's see what happens if you pay yourself 75,000. Well, you can put in 33,440. But if you pay your spouse the other $75,000, then they can put in $33,440. So that's a total of $66,000 in contributions instead of the original $47,000. Sometimes by splitting up your salaries, your payroll, you're both able to contribute more, which means you can contribute more to a solo 401k plan. Contributions are highly personal. It's very unique. As you saw, we're trying to calculate self-employment tax and the deduction. I don't know if you have other income that you're earning from other jobs. So this is something you definitely need to work with your accountant or CPA on. But this contribution calculator can be a really good place to start. Another resource I want to bring to your attention, Lipsy, is if you come into solo401k.net. So that is our network. This is free. This is available to anyone. And our experts are in here throughout the day answering questions. We discuss a lot of investment topics in here. There's hundreds and hundreds of people in here. It's really cool. If you go to events, and you click on past, these are past events. This is where you can see historically all of the trainings that we're doing for our 401k clients. And we do trainings on an ongoing basis. And Lipsy, specifically, I want to find a training here for you. This one, spousal inclusion in a solo 401k. So I'm going to put this in chat here for you, Lipsy. This training was all about how to work with your spouse to make sure that you're maximizing contributions. And we go over some specific calculations on how just by splitting up the payroll you each receive, sometimes you can contribute a lot more money. So Lipsy, if we're going back to your question, how much you can each contribute depends on your compensation. So self-employment taxes come out first, and then your contributions can be made. And how much you will each contribute is based on your salary, on your compensation. If you're each getting paid $150,000, then you should each be able to contribute about $48,000. Use that contribution calculator to determine your numbers. Okay, you're both over 50 and it would be $150K each. Awesome. So now let me open up that contribution calculator one more time, Lipsy. Thank you for that additional information. So $150K each. And Lipsy, you guys have an LLC? Are you taxed as an S-corp or are you taxed as a partnership? Let me know when you get a chance. Are you taxed as a partnership or are you taxed as an S-corp in your business, Lipsy? S-corp. Okay, beautiful. Thank you. So now what I'm going to do, Lipsy, is I'm going to slightly revise this. And again, I am not your accountant. I am not your CPA. I am not giving you tax advice. You must work with your accountant to determine what works for you guys. So Lipsy, for an S-corp, contributions are based on W-2 wages. So you would each need a W-2. And let's say you're each pulling a W-2 of $150,000, you can each maximize your contribution of $63,500. Let me repeat that. Since you're an LLC taxed as an S-corp, S-corp contributions come from W-2 earnings. So that means you each would get a W-2. And then if you're each showing $150,000 on your W-2 and you're both over age 50, from your $150,000, you can each contribute the maximum, $63,500. Now, if you're showing $150,000 each on your W-2, that $150,000 is also subject to payroll taxes. The IRS is never going to let us have any free money. They're always going to take their cut. So do keep that in mind. But I would say, Lipsy, you're in a good situation to be able to no W-2s, 1099s in 2020. Well, according to the IRS, contributions for S-corps are based on W-2s. So they're not based on owner draws or distributions. I like to pull this up. What do? I do IRS, FAQ, S-corp, this one. I'm going to post this in the chat for you, Lipsy. The IRS, though, is quite clear that salary deferral contributions are based on W-2. and matching or non-elective, in other words, profit sharing contributions, are based on W-2. So I do think it's important that you chat with your accountant or CPA to determine how you want to chart that, because typically the IRS for S-corps wants you to show a W-2 for your in order to be able to contribute. So that's going to be something you'll want to discuss with your accountant, and I'm sure they'll be able to guide you. Again, Lipsy, if you need a list of accountants familiar with the CPA, make sure you go to the knowledge base at support.solo401k.com, type in CPA, and access our CPA literate resource list. Okay, so you said they said it would be 1099s. I think you need to double check with them and let them know that the specific purpose is to make contributions to an employer-sponsored retirement plan. IRS guidelines are pretty clear for S-corps that that's based on W-2. So I would talk to the CPA, make sure they're familiar with a solo 401k plan or an employer-sponsored plan, because I'm guessing they'll probably say it needs to be a W-2. If you tell them what your goals are, you need to share with them that your goals are to make contributions to a retirement plan. Otherwise, they might tell you to do 1099s, because then there's no self-employment tax. There's no FICA on 1099. So for just reducing taxes, that can make sense. The only trouble is if you're not paying FICA, that income is also not eligible for employee benefit plan contributions. So it's kind of a trade-off. It's a dance with the IRS. Make sure you're working closely with them so that they can provide you guidance there. Okay. Next question comes from Lipsy. So can we open and contribute to a Roth IRA if we've contributed to the max employee contribution to the solo 401k? Yes, you can contribute to both a Roth IRA and a max solo 401k at the same time. However, Lipsy, you do need to make sure you're working with your accountant. Roth IRAs have income ceilings, and if you're above the income ceiling, then you are not eligible to contribute to a Roth IRA. So work closely with your accountant, but yeah, it's fine to open and contribute to a Roth IRA and a solo 401k, assuming that your accountant is helping you with those income ceilings when it comes to Roth IRAs. All right. Next question comes from Vishal. I'm getting conflicting information on after-tax contributions from my CPA. I just want to clarify the criteria. After-tax contribution is the lesser amount of 100% of your self-employment compensation, as long as it's less than or equal to $57,000 for 2020. And the overall limit is reduced by any pre-tax or Roth employee contribution salary deferrals and any pre-tax employer profit-sharing contributions. Yeah, you're right about that so far. So Vishal, the maximum you can put into a 401k plan, any 401k, is $57,000, assuming you're under age 50. The IRS calls this the overall 415 limit. I know, boring tax code stuff on a Monday, but the IRS calls this the overall 415 limit. And it basically means that no matter what, you can't go above that max per plan. So it doesn't, really matter how you get there. It depends on each individual based on their business situation, their tax goals, their investment strategy, whether or not they're contributing to another retirement plan. There's a lot of factors in contributions. That's why we recommend you work with your accountant. It's so personalized. But the long and the short of it is, Vishal, pre-tax, Roth, employer, employee, they can't go above 57 max total. So let's say you did 57,000 all in after tax contribution, right? This is the employee after tax non-deductible. And you went all in 57,000. That's it. You've maxed out your contribution limit for the solo 401k. You can't also put in extra from a pre-tax or employer. The overall 415 limit says 57K is the ceiling per plan. So now let's go to your question. You said, for example, on $50,000 of income, I can elect to contribute all of it, $18,500 50,000, 19,500 minus 12,500. Okay, I think what you're trying to say here, Vishal, is 19,500 would be your employee salary deferral contribution. 12,500 would be your employer profit sharing contribution. And the remaining 18,000 gets you up to 50K, and that can be after tax. That's right. Yeah, you're right. I'm not sure what the conflicting information is, but that's correct. As long as you don't go above 57,000 total per plan, then how you slice and dice it is really up to you, assuming you're falling within the IRS limits. So in this case, Vishal, if you earned $50,000 in self-employment income, subject to self-employment tax, then you could put in 19,500 as an employee, pre-tax or Roth. You could put in 12,500 as an employer, pre-tax, and you could put 18,000 in as an after-tax, and then convert that to a Roth 401k. I think that looks good. I'm not your accountant, of course, Vishal, so always double check with them, but that looks good to me. All right. We have one more pre-submitted question, and then, oh, good. I'm glad, Vishal, that would help. That helped. Good. Okay. We've got one more pre-submitted question, guys. If you have any questions you would like to include, then you can put those into the chat on this side of the page, or right down here, there's a link that says ask a question, and you can post there as well. So our next question comes from Lipsy. Lipsy says, can we and when can we transfer a Fidelity account, 401k account into the solo 401k? And then I think you said a Fidelity IRA. So Lipsy, your question is, can we transfer a Fidelity IRA into the solo 401k? Yes. When can we transfer the Fidelity IRA account funds into the solo 401k? Anytime. Lipsy, I think we already prepared your documents, and I think we got your tax ID number. Sometimes towards the end of the year, we get account applications sometimes every 10 or 15 minutes. So sometimes they all start to run together at the end of the year. But I think if I remember correctly, Lipsy, I think we already got your tax ID number, and I think we prepared your documents. If that's the case, then you can start your rollover from your Fidelity IRA anytime. Rollovers do not have to happen by December 31st. You can do rollovers on your own schedule whenever you're ready. If we did not get your tax ID number yet from the IRS because they're closed, then we need to do that first. So our next step is on the 4th when the IRS reopens. Then we'll get your tax ID number. We will update your documents, and then you can begin your rollover at that time. So Lipsy, I'll share my screen for just a moment here to kind of walk you through this process of the rollover. But if we go back to the 401k dashboard, then the easiest thing to do, Lipsy, is just click on this link right here for rollovers. We have a video that we walk you through exactly how to complete this form, and you'll just fill out this short form here. You know, this is going to be your 401k, solo 401k plan information. This is your information here in the middle as trustee. And then this would be Fidelity's information, right? They're the ones sending the money. So you would complete this short intake form and then create a rollover document. And I think I actually have one on this demo. Yes, I do. So this is what the rollover request will look like. We have a cover page for you to send, in this case, great for Fidelity. We tell them exactly how to make out the check, who to send the check to, and then we have the transfer authorization instructions. Now, this video here on the rollovers page goes through in its entirety exactly what you need to do. So watch this video before you prepare the rollover request, because we'll tell you who signs where, what do you do? But we're really clear with Fidelity, this is not a taxable distribution. The funds should be payable to the trust. There's no taxes withheld. So Lipsy, whenever you're ready to get started, we do walk you through exactly how to start that rollover. I would say if it's not urgent, then wait until the first or second week of January. A lot of these brokerage firms, just like all retirement plan providers at the end of the year, everybody gets totally slammed. We have to prepare plans by December 31st for the qualification deadline. So everybody it's a little intense for everybody. I'm sure that Fidelity will be able to process the rollover request even faster if you wait until the first week of January. Sometimes what happens is so many people put it through now that it backlogs their queue. Whereas if you just submitted it on, January 6th, January 7th, they might already have started working through it. So your processing times can sometimes be faster. So when can you transfer it? Anytime. And how? Just use that rollover request. Great questions, Lipsy. All right. So next question here. Oh, more clarification from Lipsy. Great. I did speak with Hannah at Neighbors. Love Hannah. My account and their payroll department for income made in the company in the fourth quarter. Oh, I spoke with Hannah, my accountant, and their payroll department for income made in the company for fourth quarter. I was told 1099s were okay, and it's not possible to do W-2 on the salaries since the company will be dissolved at the end of the year. Aha. Okay. So if you're dissolving the company, Lipsy, then the 1099s may be okay. Just get the sign off of your accountant for that, because that is contrary to what the IRS is showing on their website. So make sure that you have your accountant guiding you. Your accountant is your qualified tax professional. They are the ones that give you tax advice. So we're here to help with logistics. We are your IRS plan document provider. We are not engaged as your tax professional. We do not give you tax advice. If your accountant has given you their blessing and said that that's how things need to run, then they will guide you through that process. If your accountant is unfamiliar with a solo 401k or what you're trying to accomplish, then it might be worth getting a second opinion from one of the solo 401ks on the CPA solo 401k literate list that we provide you in the knowledge base. So no matter what, though, have an accounting professional guiding you here because you want to get that tax deduction. That tax deduction is really important. So make sure that your accountant or your qualified tax professional is guiding you. Great questions. Thanks, Lipsy. A little knowledge. A little note here from Jorge. Thank you so much. Jorge says, very informative as usual. Thanks for the links to the Solo 401k Knowledge Base webpage. I want to stress that I'm able to follow your chat fairly well. Thank you. I know sometimes retirement accounts can be very, very complicated. There's a lot of moving parts. There's a lot of, I call them decision trees. So if this, then that. If this, then that. If your business is an LLC, then you have to calculate your contributions like this. If you're making an after-tax contribution, then you need to do that. There's a lot of decisions that happen in running a retirement plan, and there's a lot of rules. So I really appreciate the feedback, Jorge, that it was pretty easy to follow. We try to equip you as much as possible with tools. Access to CPA resources, access to attorney resources, trainings that we do on an ongoing basis, calculators, forms, knowledge base articles, because there's a lot in these plans. So I'm really glad to hear that this is helpful. Let's do one last call for questions today. If you have questions that we didn't get to today, no worries. We are back tomorrow at 3 p.m. Eastern time. We are here every single day until the end of the year. So that means Monday, Tuesday, Wednesday, Thursday. We are here to do these Q&A sessions every day at 3 p.m. You can post questions right here on the page. Our team looks at all of the questions at the end of the session so that we can bring any that weren't answered into tomorrow's session. If you don't want to wait, then probably the fastest thing to do is to submit your question on the network at solo401k.net. Our experts can answer, and some of our veteran account holders that have been with us for 10, 15 years will jump in and answer your questions as well. So that's a great place to touch base with your community and make sure that you are getting support. You guys are doing awesome. It's actually really fun doing these Q&As. I really like it. I'm hoping it's something that we can continue into next year. I don't know if we'll do them every day, but on an ongoing basis, it's just really nice to have a place where we can all get together and get some questions answered for you. So we look forward to continuing to support you. If you have any further questions, let us know, and we'll see you tomorrow.